Hello traders, my name is Dimitrios Karalampidis and I welcome you to my first video ever for Snail Trading. Snail Trading is a proprietary trading company that sells no services directly to clients, and thus this video is for educational purposes only. At this point I will show you our risk disclaimer on the screen, and I'm asking you to visit the legal section of our website, read and make sure you completely understand everything before continuing. Okay, now we're ready to start. This is a welcome video and it's going to be rather long. We're going to cover all major currencies, DAX, S&P 500, gold and crude oil. We're going to take a look at the larger picture of each instrument, and then we're going to dig down to smaller time frames in order to completely understand our point of view. In our next weekly videos, we will only show you 4-hour charts, but since this is a welcome video, I decided to make an appropriate introduction and present you our work in detail. So enough talking, and let's get down to the business. Okay, we're gonna start with gold. It is Friday night, early Saturday, and markets are closed, so prices are not gonna move, and it's this way easier for me to show you the counts. So we consider gold to have finished a super cycle degree back in 2011 and a major top here, and since then prices are moving lower. I'm gonna open the weekly chart, and we can see here our Elliott wave labels. This is a top. I have labeled this as an A, but probably not an A, but for the purposes of our analysis, we keep our eyes only to this fifth wave here that is finished. Since then, prices are moving lower, probably in a corrective manner, and we have two scenarios. The first scenario is that this move down was wave 1, and then we have a complex correction W, X, Y to complete the second wave, and then a 5-wave move down, 1, 2, 3, 4, 5 to complete the third wave, a fourth wave up, which went up to the point of the fourth wave of 1 lesser degree, which is pretty common, and since then prices are moving downwards, and mostly downwards and sideways in overlapping waves, forming a downsloping wedge, as we can see here, which in Elliott wave terms we have labeled this as an ending diagonal. 1, 2, 3, 4, 5. And this whole move, we consider this as an impulse to the downside of 1, 2, 3, 4, and 5. This completes wave A of a broader correction. So we expect prices to move up in a B wave with first target the area of wave 4 of 1 lesser degree around the 1430. For wave B, probably even higher to this major resistance level around the 1550, and then move down again in wave C to complete the correction in the future. The other scenario is that the correction is already complete and is counted like W, X, Y, X, Z as a complex correction to the downside. We have little confidence in this count, that's why it is labeled with black letters, suggesting that this is an alternative, and we may consider this scenario only if prices are getting strong around these levels and moving higher, so it will be probable that the correction is over and we're moving to new highs in the future. Until then, the main scenario remains that we have only completed the 5-wave move down to complete wave A, and we expect a wave B and a wave C after that in the future. Moving lower in at the daily chart, we can see how this ending diagonal have overlapping waves into its internals, like A, B, C. B, C for wave 1, A, B, C for wave 2, A, B, C for wave 3, and A, B, C for wave 4, A, B, C for wave 5, completing the ending diagonal here and probably a major bottom at the 1070 area. And from there we have a wave 1 up, wave 2, and we're looking forward for more price data uh, to label these moves from here according to our higher time frame scenario, which suggests that prices are moving much higher. Digging even lower for the wave 4 chart, we can see how prices have moved higher after this probably major bottom here at 1070, and bounced here for wave 1. Then we have a nasty correction here for wave 2, and 1, 2, 3, 4, 5, wave 3, 4, and 5, and this is wave 1 to the upside. Then we have a corrected move to the downside, and it is clearly a 3-wave move to the downside, so we labeled it as an ABC for wave 2. And then again a 5-wave move up, 1, 2, 3, 4, 5 for wave 1 of one lesser degree. A sharp decline here, which we have labeled as a wave 2. As we can see here, this is a very deep correction of 90% of this wave of this up move, which is not uncommon for commodities. And even if even if we dig lower and see the internals of this move, we can see that here we have overlap, and it is probably something like 1, 2, 3, 4, 5 for A. This is B, and 1, 2, 3, 4, 5 for wave C, and this is the completed wave 2. From here we have a very sharp move up, and then some overlapping wave action, which we suggest that it is an ending diagonal of some lesser degree to complete the wave 1 here. From there we have prices moving lower in overlapping wave, suggesting that this is also a correction. And if you remember, at the end of the previous week, we suggested that prices will move lower towards the support level of 1152, and prices actually did that. However, they penetrated our resistance level up here before doing so, and then moved back lower. So we probably have here some kind of leading diagonal for wave A here. This would be wave B up here, which found resistance at the level we suggested in our report from previous week, and then prices moved again fast to the downside, and this could be counted as an impulse to the downside, which appears to be at its latest stages. Prices are starting to lose momentum for the downside here. We cannot say that it is completed. It is very difficult at the current point to say that it's completed, but prices should certainly find support around this area between our new support level at 1131, and we will see a reversal to the upside during the next sessions. So we expect this support area here 1131 to hold. It may not reach this level and bounce from around this area, and the first target is 1180, and then prices are moving even higher, like in a third wave that we expect. This is a very large gap. It is almost $50 per ounce gap, but it is difficult to label a bottom here because there are a lot of overlapping waves. Maybe this will form also an ending diagonal of some kind here as a fifth wave of this move to the downside. And somewhere here the correction will be finished and then we'll go up. This is actually a very good opportunity to open a long trade because it gives a risk reward ratio of something like 1 to 4. It is 1141 with a stop at 1131 and moving as first target to 1180. It is always a good it is always a good idea to cash out at major resistance and support levels because prices will probably find resistance here and move again lower. So if you are long from here, you can exit here and then re-enter for again for a new trade following the count of the larger picture. That's all about gold, and we're ready to move on with oil. Much like with gold, on oil we also have a major top back in 2008 at the beginning of the debt crisis. Oil plummeted really in a very sharp manner here from the $147 per barrel, and it reached in only a year the level of $33 per barrel. We can move to our weekly chart and we can see that after that major top here on around the $147 per barrel, we have a very sharp decline. This was on July 2008, and on January 2009, only in a few months, prices have plummeted for more than $100 per barrel, and it found a major low here, and since then prices are moving sideways, forming overlapping waves, and we can count this as 1, 2, 3, 4, 5, an impulse to the upside from here to complete wave A, and then a triangle here to form wave B, and another 5 wave move up, 1, 2, 3, 4, 5 for wave C to complete the wave B here. This is A and this is B, and from here prices are moving lower in an impulsive manner. It is difficult to again to pick bottoms, and we're not sure if this was the bottom at the $37.7 per barrel, but given the internals of this up move, we think that this price action here is corrective, so we're looking for another low before labeling this correction as complete. Probably prices will move lower than the low of 2009, so we may see oil to move lower than the possibly the $30 per barrel, and then from there we'll move higher, possibly to new highs in the coming years. We can go now to our daily chart here to see this move to the downside. As we can see here, we have here we can see that we have wave 1, 2, 3, 4, 5 for completing the wave 1 here, and then a correction here to complete wave 2, and a very sharp decline from there, like in wave 3s to complete wave 3 here. Then a fake new low here, which was I'm saying fake because it was only wave B. This was wave A, wave B, and wave C to the upside for wave 4. And again, we expect 5 wave move down. We have 1, 2, 3. This is 4, and now we're moving from here to probably to new lows to complete wave 5 and wave C of larger degree, and then move higher from there. If we go to the 4-hour chart, we can see that this move here down completed the fifth wave of wave 3, and then we have 1, 2, 3, 4, 5 to the upside for wave A, and then this is a triangle A, B, C, D, E for wave B, and another wave which is impulsive, 1, 2, 3, 4, 5. It is smaller, the wave C is smaller than wave A significantly. If we put an Fibonacci expansion on it, we can see that it is actually 61.8%, almost 61.8% of the wave A. It's the length of wave C, which is not uncommon. It can happen. So we consider this as the last wave of wave 4, and we're expecting wave 5 to the downside. Now, trying to label the wave action of last week, we have informed you last Sunday with our report that prices are moving lower, and they did. They moved lower, and even lower than the level we were expecting. And we count this as 1, 2, 3, 4, 5, an extended 5 here. Very common for commodities, again I'm saying. And then we have a very sharp move to the upside, which we consider that it is let me use again the word a fake move to the upside, which looks like an impulse. It is 1, 2, 3, 4, 5, and probably this is a B and a C, a very small C again compared to A, and probably the correction is over here, and this is wave 2, and we're moving lower next week for wave 3 to the downside, which will probably lead us to new lows below the $37.7 per barrel area, which was the bottom of wave 3 here. It is also possible that this correction is not over, and we may see a modest new high here. So we are setting our new resistance level at 47.95, where is the fourth wave of 1 lesser degree, and we expect the first target to be the low of wave 1 here at 42.55. This is the first target. Of course, we're moving even lower from there, but this will provide some support for sure. And again, it is a good idea to, if you enter a short trade here, a good idea to exit here and re-enter in the future. Again, this is a really nice opportunity for a short trade. Like with gold, there is a long trade on gold and a short trade on oil with regards to risk-reward ratio. Prices are around the $46 per barrel, and excuse me, and we're moving with first target to 42 and with a stop around the $48 per barrel. A very good opportunity. This level will provide some resistance for sure. We're not sure if we're going to reach this level, but this area here should provide resistance, and prices should move lower according to our Elliott wave count and expectations for the next sessions. So that's all about oil, and we can move on to the Australian dollar. Okay, we're finished with our commodities, gold and oil, and we're moving on to major currencies. And we're starting with Australian dollar. We can see that the Australian dollar was bullish since around 2000, 2001, and it was moving up until 2008, when during the debt crisis it dropped sharply. It raised most of the gains of all those 7 years of upside just in a few months, and then it rebounded very sharply, and it registered new highs in 2011. It registered a major top. This coincides with the price action in on gold. Australian dollar, it is considered a commodity currency, and it has great correlation with gold. And again, after 2011, it is moving downwards together with gold again. So let's move to our weekly chart to see what's going on. We have 5 wave move up to the 2008 here, and then the drop during the debt crisis was made in 3 waves, A, B, C, completed the B wave to the downside, and then we have 5 waves to the upside, 1, 2, 3, 4, and 5, to complete wave C and the W of a higher degree. From there, the downside looks like our alternative for gold, if you remember it, with the black labels, W, X, Y, X, Z, if you remember it, which is not the preferred count for gold for us. But here, the beginning of the downside is in 3 waves, A, B, C, so we label this as W, and then this moves here as a triangle, A, B, C, D, E, to form an X, and from there we have an A, B, C to the downside for Y, completing a higher level, a higher degree X, and thus we expect higher prices from here. We are not sure again, as with gold, we cannot be sure that this is actually the bottom. We may see lower prices from here, and probably this move to the downside is not completed. It is very difficult to pick a bottom. So, but again here, as with gold, we believe that this was a major bottom for Australian dollar, and prices are moving higher from here. We're moving to our daily chart to see the internals of these moves, and we can see that from here we have wave 1, 2, 3, 4, and 5 here completed, completing the wave Y to the downside, so we expect higher prices from here, and we label this as wave 1, 2, and we're expecting a third wave with first targets near this level at 8160 in the future. So going even lower to the 4-hour chart, we can see that after this decline here, prices moved in an overlapping manner, but if we try, we can label this as an impulse to the upside, and this as a wave 1, and then a strange looking ABC to the downside for wave 2, and 1, 2, 3, 4, 5 to the upside for wave 1 of our listed degree, and this as A, B, C for wave 2. We told you we reported in our last week report for Australian dollar that prices are moving lower in correction, and they did, and we think they found the bottom again to this new support level here at 7065, 0.7065, and from there it bounced sharply, and we expect higher prices in the coming sessions with first target 7250, 0.7250. Of course, as we said before, this could also be a wave, this wave 4 to be of a lesser degree, and this wave 4 to be here and moving lower from here. But this would be the alternative for us. We expect higher prices from here, and if prices continue to the downside and break this support level and continue to the downside from here, that means that this count will be invalidated, and we will have to re-examine the whole situation and relabel the waves in order to allow for another low before going higher. Until then, we expect prices to continue lower, to continue higher, excuse me, since this downside seems corrective, and the bounce was sharp. The momentum also turned bullish from here, and this coincides with our count for gold. So we choose this count as our main, expecting higher price from here. Again, a very good opportunity here for traders, with a stop right at the bottom of last week at 0.7065, moving at much higher levels in the future, but with first target 7250. There's plenty of space for profit here, and we consider this also a good opportunity for next week. That's all about Australian dollar, and we're moving on to the most traded currency pair in the world, the euro. Okay, we continue with the euro, the most traded currency, the euro against the United States dollar, the most traded currency pair in the world, and probably the pair that most of you are interested in. We can see in this monthly chart that the euro was bullish since the dot-com crisis on 2000, was bullish against the United States dollar until the 2008, the start of the debt crisis, the biggest financial crisis of our for the latest decades, and we can see that it reached the level of around 160, and since then it is going lower in a corrective manner. If we consider this move up from 2000 until 2008 as an impulse, as 1, 2, and 3, 4, 5, and not as an A, B, C, we can see that this move to the downside is corrective, and probably when it is finished, prices will move higher to probably a new high higher than 160. But it is really premature to talk about this at the current point. However, we can draw here a Fibonacci retracement from the bottom here up to the high of 2008 here, and we can see some interesting stuff here. First of all, we can see that we are below the 61.8 retracement of this move up, and that prices were unable to close a candle above that level. So that shows us that this level here, the 61.8% retracement of that move, provides some very strong resistance, and prices, although they're jumping above it, they cannot close in a monthly basis above this level, which suggests that lower prices are ahead. The next Fibonacci retracement is the 78.6%, which comes at around the 0.99 area, around the parity, very near to parity here, which was also a resistance level here in 2002, the beginning of 2002, which was broken to the upside, of course. And probably, if prices continue to the downside, we may reach this psychological level of parity, 1 to 1, and even move a little lower, and then prices may continue to the upside to new highs in the future. But let's go to our weekly chart to see the internals of this move. And we're opening here our weekly charts, and we see that we label this downside from 2008 as an impulse to the downside. It may also be an ABC, and this would be a W, which would mean that this is not a B but an X, and this would be a Y, but not a big deal actually. The count remains the same. We have wave A here, and then a triangle, a very large triangle, since 2008 and until 2014 here. We have WXY for A, ABC for B, WXY for C, ABC for D, WXY for E, and then an impulse to the downside that is still under development. It is also interesting here to see the following, that if we draw a Fibonacci expansion from the high of 2008 to from the wave B, the end of the triangle, we can see that the level at which wave A is equal to wave C that we're expecting here is also around parity. It is actually 1.025, very near to parity. This level should also provide a lot of support, and coincides with our broader view for the pair. And we can go now to the daily chart to examine this move. And as you can see, this is wave 1, wave 2, and wave 3, 4, and 5 complete wave 1 here, wave 2 up here, and 1, 2, 3, 4, 5 to the downside, and complete the wave 3 around here. Then prices are moving in an overlapping manner in an upsloping channel here, which we believe that the correction has been finished here, which is the 50% retracement of the third wave, and We label this as a very complex correction, WXY, and the internals are all WXYs. And we believe that this is the wave 1 to the downside and WXY to the upside. And here we have a very interesting pattern which provides confirmation to this count. Prices have dropped sharply, moved below the lower boundaries of this huge channel here, testing the channel, going down again, and now they're testing again the channel, and they cannot stay above the channel, they're moving lower again. So this provides some confirmation that in the near future we are going to see lower prices for the euro according to our count for the euro against the dollar. Going even lower to our 4-hour chart, we can see how this drop from this high here is in 5 waves, 1, 2, 3, 4, 5, and some complex corrections again here for wave 2, which also found resistance at a Fibonacci retracement level of that move. If we draw the lines from here, we can see that this was the 61.8% retracement of that move to the downside, and prices was rejected there and moved again lower in an impulsive manner. We can count here 1, 2, 3, 4, 5 to the downside, and as expected, prices are moving up near the lower degree 4 wave, like it happened here. Mostly it was very near to touch these lower boundaries of the channel, and it turned lower again before doing so. There are still possibilities that prices will return to the upside, but we believe that they will be rejected at this level and continue lower. We consider this upside as corrective and finished for wave 2, and we're expecting lower prices for the coming session. Our support and resistance levels of our last week's report were not triggered, nor the resistance nor neither the resistance nor the support, and we changed them a bit. We are now having the resistance at 1.11 and the support at 1.08. So again, this represents a very nice opportunity for entering short with a stop just here and moving lower, much lower than this, but as a first target, the 10.8 level should provide some support, and it is a good place to at least take some partial profits. So that's for euro. We're expecting much lower prices. We're looking for parity in the coming weeks or months, and after that we may see a very strong rebound for euro that would move even to new highs in the coming years. So that's all for euro, the most traded currency. Most of you are interested in this currency, so it is nice to consider this scenario as a possibility, and we're ready to move on with the British pound. Okay, British pound. Again, we can see that the pound was bullish since 2001, and it was moving up from the area of around 136.70, 36.80, and it moved for 7 years to the upside mostly, and it reached the level of 212, 212.60 approximately, before the debt crisis, and then it plummeted really, and it dropped to new lows. It registered a new low on at around the level of 135, and this makes it a little difficult to interpret this makes it impossible, impossible to interpret this drop to the downside as a correction of that move, since this is it registered a new low below this level. There are several ways to count this upside. You can count it as a 5-wave move to the upside. You can count it as a 3-wave move to the upside, like an ABC here. You can also count this whole move to the upside as a 3-wave. We can say that here we had a 5-wave move to the upside until here as an A and a B to the downside, and then 5-wave move to the upside as a C-wave, completed a wave W here, and that's what we do. Whether this is a W formed due to this ABC or to a larger ABC, we believe that this move to the upside was a W, and therefore this wave to the downside, although it looks like an impulse to the downside, we believe it is not. We believe it is a 3-wave down to the downside, despite the proportions of this wave A, B, and C to the downside. We consider this a 3-wave move to the downside that happened during the debt crisis, and we label this as an X, and therefore we are waiting for a 3-wave move to the upside to label it as a wave Y, and it must be something not necessarily, but usually something very near to proportions of these moves here. So this move to until now, it is very small to be completed, and therefore we believe that it is not finished as a wave Y, and we can go now to our weekly chart to show you what we mean. Going to the weekly chart, excuse me, we can see how we label this downside, and we believe that this is the right way to label this as an A, B, and C, despite the difference in proportions between wave A and wave C. This completes here wave X to the downside, and then we have a 5-wave move to the upside, 1, 2, 3, 4, 5 for wave A, and a very long and complex correction here that we label as an A, 1, 2, 3, 4, 5 as an A, and then a B like WXY for a B, and we're expecting a 5-wave move to the downside to complete wave B, and then move to the upside for wave C to complete wave Y, somewhere at here these levels, probably around the £2 per dollar, and therefore in the long term we may already be bullish. We will be bullish in some time for sure, according to our count at least. So there is also a possibility that this downside is finished. Proportionally, it could be okay to be finished, and this could be 1, 2, 3, 4, 5, but the internals doesn't help a lot to count this as 1, 2, 3, 4, 5 completed. So we believe that this was the 4th wave, and we're moving to a new low before going up. We're gonna dig down to our daily chart now to see the internals of these moves here, to tell you what I'm talking about. Okay, moving to the daily chart, we have a very sharp move to the downside here that we label as wave 1, a correction to the upside that we believe is wave 2. If we go lower here, we can see that despite the fact that it looks very ugly on the daily chart, On the smaller time frames, this can be counted as a 5-wave move to the downside, as 1, 2, and 3, and then 4 and 5 completed wave 3 here, and then we have a fake new low in the form of B, I mean, and then a strong upside that we label as ABC for W, X, and Y to complete wave 4 here. The problem starts developing here. We have 1, 2, and then a series of overlapping waves here that are 5-wave moves to the downside, 3 to the upside, and then again 5 to the downside, making it difficult to count this as an impulse to the downside. Until now, we had a break of this downsloping trend line several times, but prices didn't manage to stay above this trend line. Although this week that happened, we have a close price above this trend line, giving some bullishness to the pair, and therefore making the count a little bit of giving to the count a little bit of improbability. But until we get an invalidation in Elliott wave terms, we're going to stick with our count. I'm gonna go now to the 4-hour chart to see the internals of this move and explain you why it is difficult to maintain this count for very long. We had here the first wave down as I saw you, and then a complex correction to the upside, but that broke above the channel, but returned immediately lower. We label this as a wave 2, and then we have 1, 2, 3, 4, 5, a 5-wave move to the downside, that which we count as wave 1 of 1 lesser degree. Then this is certainly here a 3-wave move to the upside within the channel. We label this as wave 2, and we would be expecting lower prices from here, although we had immediately a 5-wave move to the upside, giving some confidence to this whole count. And then prices returned back to the upside in an overlapping manner, suggesting this is a correction, although very deep, and we would expect much lower prices from here. What it did, it certainly went lower, as we suggested on our report from last Sunday. It didn't reach our target, which was here at 152, and then it bounced really sharp and strong to the upside, taking out our resistance level and turning back the bullish momentum into force. The situation here is like that. We have already a series of 1, 2, 1, 2, 1, 2, 1, 2 again, and it would be very difficult to count this again as 1, 2 of 1 lesser degree. The picture starts getting very ugly, although it is not improbable. But the odds say that if we break our new support, our new resistance level at 155 and move higher, and even worse, if we break this downsloping channel and stay above it, the odds are that the whole count is incorrect, and we will have to reconsider it from the beginning, make alterations, and see what's going on. Until then, we're gonna stay with this count, expecting lower prices from here. It is not impossible that starting Monday, prices will reverse to the downside hard, and we will see lower prices from here. We're therefore, for now, expecting the 155 area to provide some solid resistance, and we're looking as a target to our 152 support, and waiting for price data to unveil the correct count that only the markets know. And we just need more information to see if this count will be invalidated or not. So there's nothing more at the point than wait. I wouldn't suggest to take that trade to the downside, to take a short trade here. Although there is a good risk-reward ratio, the confidence in this count is really low, and it would be a very risky trade. It will be only a trade for the real, the very hard risk taker, if you like. That sums up everything about pound, and we're now ready to move on with the New Zealand dollar. Okay, the New Zealand dollar. The situation here is much like the Australian dollar and gold. Australian dollar and the New Zealand dollar are considered both commodity currencies, and therefore they are closely related and correlated to gold. And as we can see, the New Zealand dollar was bullish since the year 2000, and it reached the top on 2008 here. And during the debt crisis, the prices plummeted, and we reached the bottom around here at the beginning of 2009, the end of 2008. A very sharp drop here. But after that, the rebound was also very sharp, and it hit in new highs and a new top on 2011 together with gold, and then it was moving sideways for a long time, for 3 years. We have another high here. We consider this pattern as a double top, and we would expect here for prices to move much lower. Um, Here we will now go to our weekly chart to see the internals of those moves. We have a 5-wave move to the downside, which we label as wave C that completes wave W to the downside. This is during the debt crisis, and since then we count this move as 1, 2, 3, 4, 5, a 5-wave move to the upside, then a triangle here. This would be an A, and then a triangle here for wave B, and a wave C that is much smaller proportionally to wave A. This wave A is huge, and compared to this little wave C, some will it looks a little angly, okay? But we do this because it works on with the internals of those moves. It can be counted like that, and we need a 3-wave move for X. There is also a possibility that there is this is wave 1, 2, and we have a wave 3 up here, and then a 4 down here, and this is a huge ending diagonal, like ABC for 1, and ABC for 2, and ABC for 3, and ABC, and here for 4 and 5, and that would be wave A of X up here, which in time is not very good. I mean, it would take a lot of time to be just wave A of X, and then this would be wave B to the downside, expecting higher prices for wave C of X. Although not improbable, we prefer this count that we saw you here. And either way, prices are expected to turn higher, even if this is wave C of X, or if it is a completely different way. Prices are expected to continue high from here for either for an X or for a C of X. So there is not a big deal if this is not the correct way to count this move from the end of 2008 and until 2014. We're gonna go now to the daily chart to see the internals of this move down during the 2015, and we can see how prices moved in an impulsive manner to the downside up to here. And here we have a correction to the upside. We count this as wave B, and then 5 waves to the downside, which completes wave C and wave Y of 1 higher degree. and then we count this as wave 1, 2, and 1, 2 of a lesser degree, meaning that prices are moving much higher, with probably initial target here at the 0.7750 area for wave 3. There are plenty of interpretations and possibilities here. There is a possibility that this is only the end of wave 3 here, and this is wave 4. But given the strength of this move and that it is possible to count it like that, now we prefer the bullish count, and since we are bullish on Australian dollar and and gold also, we prefer this bullish count, and so we have this count as main. But I have to tell you that there are also other interpretations and alternative counts that suggest that we're moving lower from here, but I don't think that this is the case. So we're going to our 4-hour chart to see the internals of this move here. As I said, we count this as the end of the end of the downside for this is excuse me, I have to count this. This is a wave Y, and okay, if this is a major bottom, which looks like it is, because prices hit it here, the 0.6130 area, and then they bounced so sharp. They produced a 4-hour candle wick so large that starts from the 0.6130 area until the 0.6520. That's a hell of a move to happen within a 4-hour candle, to downside and then back up. And we believe that this was wave 1, and this was an ABC correction to the downside for wave 2, and here we can count the 5-wave move to the upside, which we count as wave 1. It is also possible that here we have 1, 2, 3 up here, and this is wave 4, and one more wave up to the upside to complete wave 1, or that this here was only wave 3 and we're expecting a wave 4 up here or already done here. However, in this case, this downside in 3-wave structure does not help with the count that we are going to be immediately bearish, and also the momentum is bullish for now. So as we suggested in our last week report for New Zealand dollar that prices were moving lower in a corrective manner, and we hit our target. Prices actually found a bottom near the area of wave 4 of 1 lesser degree and then jumped up. So now we consider the momentum bullish, and we're looking higher, either for a 5th wave of wave 1 or wave C. We don't know at the current point. We need more price data to make a better assumption and change maybe the labeling here. Until then, we keep this count. We're bullish with support at 0.67 and initial target the highs of that move around the 0.6890. If prices go below this level and stay below here, this suggests that we are probably moving much slower, so we should have to reconsider the whole count. Until then, prices are moving higher according to our count. So that's all about New Zealand dollar, and we're ready to move on with the Canadian dollar. Moving on with the Canadian dollar, we can see how the pair was bearish since 2002. and it was moving to the downside until 2007, and then the US dollar rebounded and turned back bullish, and then weakness again. We are hitting and we have broken the resistance here and moved higher from here. We can see this move to the downside that looks impulsive, and we believe that it is. And if we start our counting from here, considering this top here as wave W, as I usually do, we see 5 wave move down to 5 waves move to the downside, and then a 3 wave move to the upside, expecting another 5 to the downside in the future, probably to complete the wave X and then a Y in far in the future. Prices have moved here very sharply to the upside, found resistance here, turned lower, and then they're struggling again with this resistance here. They broke resistance, and they have probably opened the path for this resistance up here to 140. And if we draw a Fibonacci retracement from the top all the way down to that bottom here, we can see some interesting stuff. Here, prices moved sharply to the upside during until 2008, and they made several attempts to move above the 50% retracement of this down move, and they were unsuccessful. We had 2 times close above the 50% retracement, which gave a hint that this is not a major top. And actually, it is a major top, but they suggested that we're going to revisit this area here, and actually prices moved lower and reversed up. They found the same resistance here, although they were closing several times, this time above the 50% retracement of that move. And then we had the sharp rebound to the upside, which found strong resistance at the 61.8% retracement, and I believe that this retracement will hold. We expect higher prices from here up to this resistance level here. However, on a monthly candle, I believe that prices will not close above this area, and they will jump up and then reverse again to close below, giving a serious bearish sign that we're moving lower. Let's go now to the weekly chart to see the internals of those moves. And here we can see how this upside here counts better as an ABC, although the wave C again is very large compared to wave A. And we count this as a W to the upside, and then we have A, B, and C to the downside for X, and then an A, B, and a C wave that is still under development, and we expect prices to reach the area of 140 as I said before, to complete the fifth wave here. And from there we're heading again much lower, even to new lows in the coming years. We're gonna go now to the daily chart to see some more detail in here. On the daily chart we can see how this move to the upside counts very good as an impulse, and here we have within this fifth wave we have 1, 2, 3, a very nasty correction here, A, B, and C, which finished here, and then a strong rebound from here that is currently correcting, but we believe it will soon reverse to the upside, heading to new highs. On the 4-hour chart, we see how big is this correction, this wave 4 here, and this was a 5-wave move up that we count as the 5th wave of wave 3, and then we have A and a very large B here, and 5-wave moves to the downside for wave C to complete wave 4, and here overlapping wave action to the upside. We have a little bit corrected our count from our previous week's report, which we thought that this was wave 1 here and this was wave 2, and although prices developed in 3 waves to the upside after that, which suggests that we probably have 1, 2, 3, 4, and 5 as a leading diagonal to the upside for wave 1, and then WXY to the downside for wave 2. And prices should rebound starting on Monday. We're very near our major support level here, the 130.40 for wave 2. And we place our first resistance level at 132.75. Given the fact that the downside is consists of overlapping waves, this suggests that this is a correction and prices should start going higher from here. Although the momentum is not right for now, it is bearish for now. It should turn bullish during the coming week, and we think that this represents a great opportunity for traders, which can probably enter long here with first target the 132.75. A lot of potential in here for profits, with just a very near stop loss here, a good risk-reward ratio. We expect prices to reverse to the upside and move to the upside for much higher levels in the coming sessions. So overall, we remain bullish on the pair. And although at current point the momentum is still bearish, we expect it to stop here and turn bullish again. After all, we have a zone here. You see how this support level of 130.40 was important in the past. Here many times, also here and here. So we expect this level here, which was resistance, to become once broken here to the upside, to become support as it was here, again probably here, and then move to the upside with first target here, and of course much higher levels in the future. So that's all about the Canadian dollar, and we can move on with the Swiss franc. Okay, we continue with Swiss franc. Here what we have is a very on a monthly chart we have a very large 5-wave move to the downside, beginning on the year 2000 and finished on the year 2011. You see this move here to the downside, which counts very well as an impulse. So we believe that this was a B wave and this is a C, probably concluding a much higher level wave of W here, and therefore we expect prices to move much higher in the coming years. Of course, there are alternatives where we can see something like a correction up here and then move to the downside for this move to become a three wave to the downside, and in which case we may consider this as a W here and an X up here, and then we need three waves down here for a Y. We stick to our count. In both counts, we expect higher prices for the coming months. So that's the main thing that we need to know. And going to our weekly chart, here is what I'm talking about. Is the monthly chart. We can see how this is an A, and then 1, 2, 3, 4, 5 for A, B, 1, 2, 3, 4, 5 for C, completing a B, and then 1, 2, 3, 4 in a triangle, and a 5 to wave down. Okay, let's go for the weekly, as I said. After this large triangle here, we have a 5-wave move to the downside, which completes wave C, and probably an ultra major bottom here. And from here, we have a 5-wave move to the upside, 1, 2, 3, 4, 5 as an ending diagonal here, wave 1. And then we have a complex correction of ABC for W, ABC for X, ABC for Y, ABC for X and Z. This was where the intervention of the Swedish Central Bank. And since then we have a very strong rebound to the upside, and we believe that this is going to continue like that to the upside. The alternative is that this was a wave A, this was a wave B, and we are expecting only wave C up to this point. Either way, the level of the wave 4 of one lesser degree here is very important, and it is the first target around the 170.30 area. And both counts that we have suggest more bullishness in the coming weeks and months. So we will wait for more price data to decide which count is the best to implement. For now, we are saying that we're accepting that this was wave 1, this was wave 2, and we're expecting a third wave to move higher from here. Moving lower to the daily chart, we see how after this drop we have a 5-wave move to the upside, and then 3 waves down from here, completely wave 2. This can also be counted I don't know, maybe like a triangle that finished here. I count it now here as a leading diagonal to the upside that will probably soon correct here and move more that would move higher, and then a wave 2 correction. I don't know at the current point. The main thing that we care about here is that prices are moving higher for now, either count. So whether this is the correct way to count these waves here, or this could be wave 1 and something like an A, B, C, D, and E for a triangle here to complete wave 2 here, and moving for a third wave here from here to the upside. Or even something like an A, B, and C to the upside. I don't know. Prices will show us in the future what's the best way to count. The main point here is that we expect, with all those counts, we expect higher prices in the near future. So if we go below to the 4-hour chart, we can see how these overlapping waves are all three wave structures. And here we also find the bottom, and what we expect from here is wave 1, 2, and probably 3 is already finished here, but we cannot tell for now. Probably wave 3 is finished here, and this is wave 4, and we're moving higher from here. For now, this resistance level here and here and here was broken here, was broken for good, broken to the upside, tested and continued to the upside. It should provide support from now on, and therefore, as long as the 0.98 level holds, we're looking for parity, which is a psychological level, and it is a good idea if you enter long here to cash out at parity and look forward to re-enter lower, because this level will certainly provide some strong resistance. Whether this will be at the wave 3 up here and we will see something like a decline here and then move back again for the completion of wave C, I don't know. It is valid to be finished here, the whole move, to have 3, 4, and 5. I don't think that is the case. We're already higher than the third wave, so it is possible to finish here, but either way, uh, we expect higher prices for the Swiss franc. As long as the support level holds, we're expecting higher prices with first target the parity. And that's all about Swiss franc, and we move on with the Japanese yen. The Japanese yen was moving lower for a decade, since 1998, where it registered its high level at 147.75, and then was moving lower for many years, since 98 until November 2011. And we believe that this was W, X, and the Y, and therefore this move here is another X, that it is either in its final stages, or only the first wave of X is in its final stages. It is very sharp. It reminds us this movement here. So we count this as NABC to the downside for wave Y, and this is a wave X to the upside. Let's go to the weekly chart to see the internals of that move. And as we can see here, this was an impulse to the downside. This was a very large ending diagonal here. That's how we count it. This is the ending diagonal finished here at the end of 2011, October, November, and since then prices are generally bullish. We can count here wave 1, 2, 3, a 4 in a triangle, and a fifth wave here to complete wave A. Then a triangle for B, and 1, 2, 3, 4, and a fifth wave here, which will complete wave C and wave X. Of course, there are other possibilities, something like 1, 2, 3 finished here, and the fourth here, and the fifth wave to do the upside, but proportionally doesn't look very good. This way, as we count it here, we can see how if we draw a Fibonacci expansion from here until here, up to this point, and from wave B to the upside, we can see how the 100% expansion comes at around the 130.50 area, which is also a resistance level up here, up to this point, as you can see. So we believe that this is the correct way to count this upside that started back in 2011. And here we have probably finished wave 4 in a WXY form near the area of the fourth wave of 1 lesser degree. There are of course other ways to count it, as this wave 4 correction not finished, and that we have here a W and we're looking for an X and then a Y to the downside to finish the wave 4 somewhere here in the future and then move up. We don't believe that is the case. We believe that we're moving higher directly from here. I'm going to move to the daily chart to see some internals here. This is where the wave B finished in the form of a triangle, and then we have 1 2 1 2 3 4 in a triangle, and 5 for wave 3, and then WXY for 4 around this area, which provided solid support for this wave, the fourth wave. Prices jumped up, and here we have 1 and 2, and therefore from here we're moving higher. Going even lower to our 4-wave chart, we can see this downsloping channel where prices are trapped in since the late days of August, and they are moving in overlapping manner. We think this is the best way to count it is as WXYXZ here, and from here we have 5-wave move to the upside, and although we broke again in the channel, prices jumped again outside of it. We can for example put it okay, put it like this to show you what happened here. Prices are struggling at the upper boundaries of the channel to stay to the upside. They're moving in again. We think that the area of 120 will provide solid support, and prices will soon revert higher with first target 123. There is a possibility that this correction is not over and we will see new low and then upside, but overall our expectations for the pair are bullish, and we expect once this correction is finished to move hard to the upside for much higher level than this. But the first target is 123 at the point of the wave B here. This level should provide some resistance, so if you enter here a long trade, it's a good idea to cash out and re-enter in the future. That sums up everything about the Japanese yen and the major currencies. We examined all of them one by one, and we're now ready to move on to stock exchanges, and we're gonna look to first the German DAX and then the American S&P 500. Okay, we're ready to start with DAX and the stock indices. Unfortunately, the broker does not have a very large history for these CFDs, for the DAX and the S&P 500, so we will limit ourselves to the weekly chart here, and I cannot show you the counts before that, starting in the year 2000, which we believe that was a major top there. There are a lot of interpretations for those waves since 2000. We can count the waves as a very large correction that started back then, and that means that we are still in a correction since the year 2000. And But there is also a more bullish count where we're going lower from, we're going, excuse me, higher from here. We encounter this as wave B and wave C that completed wave 2 here and not a wave B. And if this is a wave 2 here, then when we finish this wave up will be the end of wave 3. We're gonna look for a correction in wave 4 and 5 higher after that. We're gonna need more price data to make a better assumption about the future, the long-term future of the index. But until then, we are gonna stick to our count here, and we can see that since 2011 we have a third wave that finished up here, and then a correction to the downside for a fourth wave, and we're expecting a fifth wave that will finish the third wave of this move that is, excuse me, that is the correction that finished after the debt crisis of 2008. We can see here that there are a lot of analysts that suggest that this is the beginning of a larger drop in the market that will drag prices much lower. We don't believe that this is the case. We actually believe that the correction has finished here and we're moving to new highs from here directly. It is difficult to say that this was that big top, and we're looking for much lower price from here. So we believe that we have wave 1 here, and then 1 2 3 4 5 for 3, and this was the fourth wave near these levels. It found strong support here at the 93.30 area, and it bounced very sharply, suggesting that this correction is over and moving to new highs. Of course, there are other interpretations where we can say that this is an ABC for wave W. We're looking for an X and then a Y lower to this level and then to the upside, but we have to see more price data and more information in order to make further assumptions about the development. For now, the German DAX seems bullish, and we keep looking at it like that until the account is invalidated. I'm moving down to the daily chart to show you the internals of these moves. Here on the daily chart, we can see how after that fourth wave here, where we moved in 5-wave structure to the upside, 1 2 3 4 5. This was a triangle here, and from there we have overlapping action to the downside. We count this as a leading diagonal to the downside, 1 2 3 4 5 for a B, and 1 2 3 4 5 here for wave 4, and from here we're looking higher. Of course, there is a lot of resistance here. We can see that all these areas here should provide solid resistance, and we will probably very soon see a slowdown to this move up here, but we believe that this will be only a temporary stabilization and prices will continue higher from here. Going even lower to the 4-hour chart, we can see that here the fourth wave is finished in 5-wave structure to the downside, and from here we have 1 2, and we are not labeling these waves here. We're just waiting for more data to decide what is the best way to count it. We believe that this was wave 1 2, and probably third wave is gonna end somewhere up here, and then we have a 4 5 and complete a 3 here, and then a 4 into parentheses and 5, etc., for more upside leading to new highs. Until then, and since our last week's report didn't trigger any support or resistance level, we moved our support level up to this low here at 10,680. And as long as this support holds, we're looking higher for 11,250. If you are in the trade from our previous week, you should adjust your stop losses accordingly to reflect this support level here. And we're looking higher to the same target as previous week at 11,250. If prices break this support level to the downside, we may have to alter our counting and allow maybe for lower levels in an extension of this wave 4 that may not be finished. Until then, we stay bullish, we remain bullish as long as this support area of around 10,680 holds, with higher expectations looking as per target to 11,250. That's all about DAX, and let's move on to S&P 500. Okay, again, much like with DAX, the broker does not have much history to show you the whole count from at least Okay, again, much like with DAX, the broker does not have enough history to show you all the counts, at least after the year 2000, which we consider a very important top there. There are interpretations that suggest that we're currently into a correction since the year 2000. Here we have adopted the more bullish one interpretation that suggests that we're moving higher, and we see here the wave B that it's part of the correction started in 2008, and here we have a wave 2 finished, and from here we are moving much higher, and as you can see we have wave 1, 2, 3 to the upside. This is 4, and we're moving for a fifth wave to the upside that would complete wave 3. The other interpretation is that this is a wave B, and finishing this wave 5 we will finish the wave C, and we are going to move much lower below those levels, which will be a disaster for the financial markets in the coming years if this happens. Until then, though, we stick to our count, and we are looking forward to higher prices in the coming months. So moving lower to our daily chart, here we can see how this downside here in 2014 October, before 1 year, was a correction, a forward correction, and since then we have after that we had a very strong bounce, and then overlapping price action for almost a year, and we consider this price action here as a fifth wave in the form of an ending diagonal that finished wave 3 here, and after that we have a W, X, Y, and a finished correction of wave 4 here of a higher degree, and therefore we're looking forward for the fifth wave that will move to new highs. Of course, there are a lot of other interpretations here. There are analysts that suggest that this is only wave W of wave 4, and therefore we're looking as an A, B, C here for wave X, and then lower for wave Y to complete wave 4 before continuing higher. But we believe that we are going to see higher prices directly from here, and not after some time and another new low. If we go lower to the 4-hour chart, we see how we count this correction. This is the ABC of Y that finishes wave 4, and from here we have a leading diagonal as a wave 1, and ABC as an expanded flat to the downside here to complete wave 2, and from here prices are moving stubbornly higher, and we only label this as 1 2, and we are not taking the time to make assumptions in here because it is very difficult at the current point. There are too many ways to count this. It can be, for example, 1 2 3 4 and 1 2 3 4 5, complete it up here as a fifth wave, uh, and that would be third, which is very small to be a third wave, and it would be, for example, wave C of an A, B, C, and an X, and continuation of the alternative scenario I was explaining you before. But we try to keep things simple here, and we prefer the way that until it is bullish, we remain bullish, and drawing a trend line here. It is a very important trend line here to see that prices are rejected by this trend line. Until now, it happened several times. It can happen too also and move to new highs. That's what we're expecting. Actually, in our last week report, we provided you with a very narrow support and resistance levels. It was the 2060 support here, which was slightly broken here before continuing up and reaching our resistance target at 2095. We continue the same scheme here for S&P. We have a narrow support and resistance level because prices are starting to lose momentum here to the upside, but we remain bullish as long as the price action itself shows us that there is an important change to the bullish outlook, and we set our new support level to 2070 with a new target at 2115. As long as this 2070 support holds, we're looking for a first target to 2115 and maybe to new heights from here. We will update this count here as price develops, but we believe that currently it is premature to make any assumptions and put some labels here, only to be able to show you some labels. We remain bullish, that's the main point, not the labels, and that pretty much sums up everything about S&P 500, the stock indices, and all the instruments that we cover here at Snail Trading. This was a long video, a long educational video that we made it that long for just to say to welcome you to our very first video. The videos that will come every week, every weekend from now on will be significantly smaller and will cover only 4-hour charts. But we thought it was a good idea to show you our longer term views, and maybe sometime in the future we will make another video like this when we have some important updates to our daily and weekly charts to show. Until then, stay tuned and thank you for watching.